Welcome to today's event where we have the pleasure to present Embla Medical. To help us through today's presentation, we are joined by CEO Sven Silverson. Of course, Q3, your result out this morning is the main topic of this event, but do feel free to ask questions in many directions. And if I could see, compared to the analyst estimates and compared to the growth, the first part of this year, it looks like a pretty solid quarter. So I guess you are pretty satisfied, Sven, but I think you will come more into that. As always, in the box down below, you are very welcome to ask questions. Do it during the short presentation or do it after, but we will pick up most of the questions in the end. But I will hand the call over to you now, Sven.
Thank you very much, Michael, and thanks for having me here this morning, and thanks to all of you who are listening in. I am gonna start by giving a short overview of our quarter, and then, as Michael said, we'll go into the Q&A. I'm pleased to report a strong quarter three. We grew 7% organic, 11% when we include the impact of foreign exchange rate changes and impact from M&A. Also, very pleased to see our progress on the margin side. We are up year over year. Let's say both when we look at the 9 months and the quarter in terms of our EBITDA margin and bottom line profits. We also delivered a super strong cash flow here in the quarter. Despite having some headwind in the current environment, especially around topics like tariffs, we are finding ways to increase efficiency in how we operate, principally in our manufacturing organization, that have neutralized the impact of the tariffs, at least here in quarter three. When it comes to our strategic prioritization, I'm also pleased to again mention our important investment in Streifeneder ortho production here, which we announced in August. This is a very important investment for us. It helps us position our company as a full range provider in the O&P market, which will ultimately enable us to reach more patients, which is ultimately our mission and purpose as a company. I'm also pleased to talk about the impact of the products or our recent product launches. One new specific highlight here in the quarter, the Odyssey IQ by College Park, which is a great new addition to our bionic portfolio, a new foot solution. But also what is driving our super strong performance in our prosthetics and new orthotics division, growing 13%, is the impact of new products, new innovation we have in the market, the Navi, and also the Pro-Flex Terra and the Icon. These are all products that are contributing nicely to our overall growth, and also important to mention, also impacting the lives of patients that are using these products and helping them move more freely and enjoying better mobility levels. Also, a continued emphasis for our organization is to grow and mature our neuro orthotics business. The acquisition we made beginning of 2024 of Fior & Gentz is tracking according to plan. We are selectively launching in new markets, and also very pleased with the new coding decision in the US, such that we are able to use, or let's say there is reimbursement now for our high-end solution, high-end Fior & Gentz solutions, which is a very important milestone. What we're also highlighting here this quarter is our performance in patient care. This is now the fourth quarter where we are flat-ish in patient care, only growing 1%. What we are talking about, or what we are providing more transparency on, is some of the underlying reasons for why we are not performing in line with market. And it's important to, in this context, to take a step back and look at our development in patient care. We have, over the last years, made significant investments in building a patient care platform. We've acquired very good assets in some of our key markets, although until now with rather limited integration. But now we're taking the next maturity step in our patient care journey. We are launching a new brand, which we have been rolling out this year and will be through most of our patient care platform this year. And we're also making significant changes in systems and processes, such that we can operate a truly global patient care franchise. And there's lots of urgency from management on making sure we take the right steps to make sure we will get back on track on growth in patient care, and we should see us performing we're in line with market in the near future. We'll be more transparent around that when we report our Q4 earnings and set guidance for 26. Lastly, I want to mention there continues to be some volatility and turbulence in the international business environment with tariffs, and now there's Section 232 investigation in the US. Our position remains the same. We are actively monitoring the situation. We are actively working on scenarios, contingency plans, how we react once there is more certainty around what a new long-term environment is, and how we can make sustainable changes to our supply chain. So, Michael, I think I'll pause here and we can go to the Q&A.
Go to the questions. The first question coming in, your biggest competitor, Ottobock, made an IPO. Have you seen him be more aggressive up to the IPO? You know, it's normal in the market that you get more aggressive. You try to run more for growth and everything to window dress for an IPO. Have you seen any of that competitive situation? Has that maybe been a factor in your, you might say, first half year lower growth, and now it's IPO'd and now things are normalizing?
No, we haven't seen any change as such from Ottobock, and I would like to say that the fact that Ottobock is now a public company is good news for the industry. Ottobock is a very good company, and the fact that they are now a public business provides more transparency and creates more interest in this industry, which all else equal is a healthy development. So I look at this as a positive thing for our industry, that we now have two public companies.
And in that question, I've seen some comments about them having higher growth and so on. Now you've been through their business. Now you actually have gotten insight into it for really good for the first time. Is this due to a different composition? You know, where your orthopedics prosthetic and orthopedics are running very fast, and their patient care. If you understand, if you combined and looked at your business composition, maybe it's not that different, the differences in growth. So a little bit of comments on that, where you can see they are exposed to this with this much of their business, and you are with this much of your business. If you combine that, does it look like you are more on level than on the headline numbers with regarding growth?
What I'll say is that when you look at the two companies, there is some difference in business mix that needs to be accounted for. I would not like to comment too much on the Ottobock numbers because I don't know the details and can't explain the details. But from what I've seen on the highest level is that it just confirms that this is a healthy industry with good structural growth drivers. And you also see that reflected in our numbers, especially this quarter here in our prosthetics and neuroorthotics business, where we are well positioned to drive growth on the back of these structural growth drivers.
Perfect. Then there's a question about your growth in bracing and patient care. I think you talked a little bit about lifting that in the patient care. What about the bracing? Is it the market growth that is disappointing you through your long term in bracing? I think patient care you alluded to, it might have been some. You might say your focus has been on consolidating instead of catching the market growth. But what about bracing? Is there anything there? Is the market growth this low, or are you also missing some opportunities there?
The short answer on patient care is, as you referred to, the changes that we've been doing in building the foundations of a truly global patient care business. That has led to some disruption as we changed ways of working in a business which is where the financial health is dependent on utilizing fixed capacity. So when you go through changes and when you're not able to utilize your capacity, it will lead to short-term performance which is not in line with what we expect from this business area, and we have full confidence that we will return to at least market rate growth for patient care. On the bracing side, it's been a tough year, especially in the US market, which is a very big part of our bracing business. And the reason for that is, to some extent, the environment in the United States, where there is fewer elective procedures that drive demand for one-time bracing products. There's also an environment where, with tariffs, more volatility around pricing, etc. So this has been a tough year, especially for a US bracing business, and also in some pockets of our global bracing business. But if again we go back to the big picture, this is a business that is driven by also strong fundamental growth drivers in terms of people are more active, and due to also lifestyle-related topics that drive demand for what are standard solutions in each and every healthcare system. So our focus in bracing remains on utilizing our strong relationships with customers, and also finding a few growth pockets in terms of adding a few small, you could say, additions to our portfolio to utilize our market access. It's also about recognizing the trends there are in terms of volume shifting between channels, because we have in bracing fewer bigger customers that buy in volume. And then finally, it is about continue to make sure we act as a good partner for our customers, ease of doing business, selling a full, complete portfolio of bracing products. So we're working super hard on realizing at least market growth rate in our bracing division, which we've not delivered this year.
And keeping a little bit on the patient care side, do you think there are some easy levers to take? And if I may be blunt, is it what we actually almost always see? Big consolidation of IT systems. Some business gets lost in that, and when the IT systems are up and running, it gets catch up again. Is it that? I know it's not only that the explanation, but is that a part of the explanation and why you are actually still pretty optimistic about the patient care business? That was the first question. Has it been what we normally see in big IT consolidations, that some business almost for all companies get lost?
Well, I think it's super important to look at the fact that, I mean, our patient care business is the front end, you could say, of the value chain in our prosthetics and neuroorthotics business. And essentially, the patient care business will benefit from the same structural drivers that drive our product business, meaning that there are too few people that get access to good mobility solutions, and there's more tailwind than headwind on the reimbursement side. And most importantly, the solid health economics behind more people having access to good mobility solutions. That is the whole structural growth story in this chronic mobility business that we're super focused on. And the patient care business is essentially the front end of that value chain. So it will benefit from the same structural drivers as our product business. And the reason we're not delivering at market growth rate these last 4 quarters is that we are moving from what has been a fragmented platform built on good acquisitions in all of our key markets, now taking the next step in maturity in terms of building a truly global business, because it is a global business where we need to build the right global muscles that will help us elevate our performance in the regional markets. And we see lots of opportunities in patient care. It's still fragmented. There remains a big job to do in terms of simplifying procedures, in terms of how the custom fabrication is done, because every mobility device is unique to each individual. So there's always a little bit of customization, and we see lots of opportunities to increase or to do that in a more productive way that also creates value for patients. But at the end of the day, it's always going to be about our ability to offer great patient care. That's why we're in this business, and that's why it's also so complementary to our product business. And that is the essence of our model in many ways, that we derive strength from being both a patient care provider, being in direct contact every day with the people that rely on our products, as well as a innovation-driven product company.
Perfect. And then let's turn to the second part. I was looking. You mentioned you have new knees, you have new feet out. You have Fior and Gens who actually you can penetrate markets on. So let me ask in a way that an analyst might ask. Looking into 26, and I'm not asking you to guide. Do you have an extraordinary strong, product lineup ready to here compared to other years? If you understand, both with the Fior and Gens, where you can penetrate more markets, and actually your product, product launches who has been in this year. So feeling, is this a good year to go into 26 compared to other years? With a strong product lineup, with new products out, I guess is important in your market also. So a little bit of comparison, not asking you to guide on 26.
Sure. What I'll say is that now here you're touching on a key theme for our prosthetics business, which is to get more of the patient population using high quality mobility solutions. And that is our bionic story. And now we have simply a stronger product portfolio than we've had historically. Over the last couple of years, we have added the Navi, which is the next generation of our core bionic technology, which has been the Rio knee. We also have the Icon from College Park, which is a different technology platform, but also a bionic knee joint. And we also have our power knee. So we have essentially a broader portfolio that can address a bigger part of the patient population, such that we, all else equal, we are able to drive more growth in bionics. So yes, our product portfolio is stronger, and that will help us. On the neuro-orthotic side, this is again building on what I said earlier. We took this step beginning of last year to position the company to address a broader part of the patient populations that are operate or that are dealing with a chronic mobility challenge. Historically, we've just focused on amputees and prosthetics. Now it's also neuro-orthotics, which is essentially helping people who have lost the ability to use the muscles in the lower part of the leg regain mobility. And it's the exact same healthcare economics as on the prosthetic side, helping people be more mobile, all else equal, lowers the cost burden for systems and creates a higher quality of life for these individuals. So neuro-orthotics is a major focus area for our organization. This whole market is less mature than prosthetics. It's going to require some heavy lifting with regards to gaining reimbursement and to building infrastructure, doing education, raise awareness, etc. But this is what we're committed to, and we see a big opportunity to get more patients on better mobility solutions in neuro-orthotics.
Perfect. What scenarios would lead you ending at the low end of your margin guidance, given that you're already at 21? Is that related to some of the uncertainties you mentioned here, or other factors on the guidance?
I mean, we're now 9 months through the year, and we are well positioned to deliver within our guidance. I will say that there is some seasonality in our margins. Typically, Q4 is a big quarter for us in terms of overall volume because of reimbursement dynamics. Often our customers and patients have more visibility on their overall healthcare situation towards the end of the year. So this is a quarter where we will have lots of activity. So all else equal, usually our biggest quarter in terms of mobility solutions delivered, but also a quarter which all else equal is in relative terms higher on cost. So we will see a margin which is lower than, for example, what we reported here in Q3. So right now we are we're well positioned to deliver within our guidance. That's all I can say around that.
Perfect. And then what is in the prosthetic market? What is driving this high growth rate? Are you gaining market share, or has the market in general been strong in this Q3?
The market is healthy, and this is also a quarter where we have tailwind across all our regions, and and are benefiting also from product launched here in the last 12 months. So we have a lot of things working with us. But with that said, I mean, there is these underlying structural growth drivers that are driving this growth. It is the fact that there are too few people that have access to good mobility solutions. It's as all as equal a stable reimbursement environment, and also a reimbursement environment that has acknowledged the benefit of good mobility solutions with expanded coverage like you see in the US. So these are the structural growth drivers, and we're also seeing more growth in some of these private pay markets as purchasing power grows, and we have a bigger population that has an ability and willingness to invest in good healthcare solutions. So, but with that, all of that being said, the growth rate that we are recording here, 13% organic growth in prosthetics and neuro orthotics, is above what we would consider, you could say, normalized growth in this part of our business. We still expect strong organic development in this part of our business, but this is above what we expect in a more, you could say, normal quarter, quote unquote.
It's a quarter that fired on all cylinders, and that's not easy to expect every quarter, if I should understand you correct. Yes, perfect. And then a little bit about this investigation that you mentioned upon. I think all industries are getting investigated by the US, but also the tariffs and so on. And I guess if you get investigated, it's a broad industry investigation, as I understand it. And the tariffs and so on, some of the solution that might end up by all this, also tariffs and so on, is moving some part of the production to the US, especially, I guess, under an investigation scheme where they are looking at whether, the security of the US on a lot of supply chain. So would that be possible to have that set up? And secondly, maybe how are your competitors? Are they set up in the US, or are you pretty alike that much of your setup is outside US if you're looking at your big competitors? So you don't so you have an opportunity or maybe moving into the US, but it's not like your competitors are there and can take advantage. So it's a two-part question. Let's start with the first one. Setting up in the US, is that possible?
Maybe first of all, just want to be clear that we as a company are not being investigated in any shape or form in this Section 232. It's a broad topic where the US government is looking into, let's say, medical devices on a very, very broad scale, and estimating sort of whether there is a need to put in place some extraordinary tariffs. And there still remains a lot of uncertainty on how this, or whether there will be some impact, or whether this will be implemented, and then how. So that's just where we are. Now, the other aspect, sort of if and when there will be some further changes that we don't know about today in terms of tariffs for us as a company that principally produces our products in Mexico, Iceland, and China. Once there is a clear line of sight in terms of what will be a new medium long-term situation, companies are able to take decisions in terms of changing their supply chain. When we change things like where we manufacture, these are big changes, and they need, and those decisions are not taken lightly, and we will always need to understand what is the long-term scenario. But we do have a operations also in the United States. We have a small manufacturing platform with College Park in the US. We also have our central fabrication in Orlando, and we will just need to see what the new norm is, whatever that means. But what I will say is that we are, again, I assume, as all companies, always educating ourselves in terms of this development and understanding how we plan and how we are able to react to what scenarios are available. So that's all I can really say about that.
And then a suggestion, and maybe a question again, as always, about the tragic situation in Ukraine. Are you doing anything to educate some who can return to Ukraine. We have a lot of Ukrainian here in Denmark, and I guess a part of this is at the end of a war, end of a situation. I guess it's not for you to supply, but as in the rest of the world, actually people who can take care of patients. So have you made any thoughts about people being here and maybe educating them in supplying these solutions, which I guess is around the world maybe one of the bottlenecks?
Yeah, this is a big topic for our organization to address the need in Ukraine and other conflict areas, and maybe not right to characterize the situation in Ukraine as a conflict. It's just a one-sided invasion into Ukraine, which has tragically resulted in lots of amputations, and we are doing our utmost to provide the right services. However, in Ukraine, as with many other countries, there is, especially when you have an event like this, where from one day to the other, there's just a very big change in the number of people that need these types of solutions. We have a lack of infrastructure and lack of simply a broad pool of specialized individuals who have the underlying knowledge and experience to support all these individuals. So this has been something where we have felt the obligation to do our utmost, both in terms of training and we are also building more infrastructure in Ukraine to deliver more mobility solutions. So it is certainly a challenge, and there's some big need for what we are ultimately one of the strongest companies globally that can deliver and really support this situation. So we're doing our utmost.
Perfect. Let's end on that note, Sven. Thank you for taking us through your results and answering the question. I think it got us well through the investment case and the situation here now. So thank you to you, Sven, and thank you for the audience listening in.
Yeah, thanks so much for having me.